What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Nio, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. Alright, so let's start today with a couple of announcements. If you missed my last video, the channel has officially crossed the 100 subscriber mark earlier this week. Details around the big thank you giveaway are included in that video. Winners will be announced next week, Thursday, September 30th. So if you still haven't entered, you still have a little bit of time left. Also noteworthy, with the quarter coming to a close, my portfolio full transparency update is coming up. That said, I am traveling next week, so I may push that out to October 10th instead of October 3rd. Now let's get into today's content. With the month ending, we should be getting delivery numbers for both Tesla and Nio as early as next week, Friday. In the past, we saw both Nio and Tesla trade in lockstep, but that has changed now. And we're seeing more of an inverse relationship with Tesla moving up while Nio has been range bound. So in today's video, I'll go over some of the relevant macro news contributing to the downward pressure that we see on the Nio stock, key technical levels to watch, and what can be reasonably expected as we head into earnings season. I'll then wrap up with the weekly performance review expressed in percentage gain or loss. If you haven't already, drop the video an early like, as it greatly helps the content get pushed out to more people who may also find the information beneficial. And overall, it does help the channel grow. All right, let's get into it. So what's been up with Nio? It is down another 1.88% for the week and can't seem to get any traction. Since the last time I covered Nio, there are two main micro news that rocked markets and have had a direct effect on the Nio stock. The first one has to do with SEC Chair Gary Gensler making this statement during his address to Congress this past Tuesday. And he said, whether in California, the Cayman Island, or China, all companies that seek to raise money in the deep and liquid US capital markets should play by America's rules. In his address, he reaffirmed that any company that would not be compliant could get delisted by 2024. That would impact about 270 Chinese companies, including Nio. Add to that the news that one of the largest Chinese property developers in China, the Evergrande group, may default on its loan, and you have the perfect storm. The Evergrande story matters because they have creditors all around the world, and they missed their first payment this week. The concern is that a loan default here could pose systemic risk, not just to China's financial system, but also have a ripple effect around the world. Now, it's important to realize that whether it be the delisting comments or the Evergrande story, they are not brand new news. I don't mean to minimize it, but the reality is this. Nio has already issued a statement with the intent to remain compliant, and this was way back last year in 2020. And the Evergrande issue has been brewing for nearly a year now as well, and major players in the market all expect it will be resolved without any widespread blowouts. The bottom line here, these make for great headlines and unsurprisingly generate volatility in the market while people are trying to make sense of what the news actually means. Either way, near-term Chinese stocks as a whole are going to be viewed as riskier. Now, looking at Nio specifically, the key technical level to watch is $34. That's where support currently is. If that was to break down due to further unforeseen macro forces, the next level below that is $30.71, and the one level below that is $27.39. Now, I don't think we're going to get there, and I actually happen to be of the opinion that we've put in the bottom here on Monday, and the $34 level, again, will hold. That's the main reason I started adding back to my position, and there's plenty to get excited about, but more on that in a moment. If you look at the Nio chart and SP 500 chart, they look pretty similar. That massive dip that you see on Monday, that was the Evergrande news coming in for a crushing blow, not just on Nio, but on the market as a whole after 2 weeks of relentless selling. But not only did the Nio bulls stop the downward sell pressure in the stock from those who were panicking, they also defended against the sell pressure from the Gensler comment on Tuesday and went on the offensive with the rest of the market dip buyers. Now, in addition to the delivery numbers in a week's time that could serve as a catalyst, here are a few news items to be aware of. Nio has completed its summer testing of the ET7. They not only confirmed that the powertrain met design goals, but also that the battery cooling system performed as expected. Add to that the ET7 drag coefficient of 0.208, matching the Tesla Model S Plaid, which Tesla at the time and still calls the lowest drag car on Earth. This will be excellent for efficiency. Nio launched a new 75 kilowatt battery pack available to customers this November. It's expected to deliver more range, but for the same price as the 70 kilowatt pack being phased out. Bank of America analyst Ming-Soon Lee reiterated his buy rating on the Nio stock with a $62 price target, and this is on the back of the new battery pack being announced. The Nio ES8 will officially launch on September 30th in Norway, and the first batch has finally arrived after a 2-month journey. Also, remember the 500 battery swap station goal Nio had for the year? As of Friday, they have installed 484 battery swap stations, 341 superchargers in China, and a total of 2,176 charging piles. Now, this last piece of news I'm about to share does not matter much in the near term. However, it does hold potential for long-term investors like myself. The Nio ES8 became the designated vehicle for the second China-Africa Trade Expo. This expo is a national-level platform for economic and trade cooperation between China and Africa, and is an important window for Chinese enterprises to cooperate with various countries in Africa. The goal is to promote made-in-China products, and Nio, of all EV makers, was selected to help further build and reinforce a high-quality image for made-in-China products. Expo attendees, so think government officials and corporate leaders from African nations, will be chauffeured around in the ES8. Now, that could ultimately open a brand new set of future customers to Nio longer term. As I said, lots to be bullish about when it comes to Nio's business fundamentals and future outlook, especially with the EV sales rolling in October. We should get a bit more clarity in the Q3 earning call on a chip shortage situation. If you're planning to add it to your position, my perspective here is that it's probably a really good time to do so. But again, I'm not a financial advisor, so keep that in mind when you're trying to decide on your next move. The last thing that I'll mention here, just like we have a strong support at the $34 mark, heavy resistance is going to come in at $40. Now, for all the reasons that I mentioned, I believe that we'll break past that resistance level by the next earning call, which is expected to be in late October, early November timeframe. And with that, let's switch over to the weekly performance review expressed in percentage gain or loss. As you would expect, with everything we covered in the macro environment, this was a week where the portfolio got hit from every single side. The first dip came courtesy of the Evergrande news with 15.35% drop, followed by a bounce back only to go even lower to 16.88% on the SEC news. That rally upward that you see came on the back of the Fed chair, Jerome Powell, keeping the rates near zero and maintaining the expectation that the tapering will start in November. Clearly, that was what most investors were hoping for. But the market had to throw in one last jab for good measures, with China reiterating its ban on Bitcoin, and not just that, but on all cryptos. The news was good for one last drop to 14.58%. I ended up closing the week with a loss of 11.60% for the portfolio value. Definitely a volatile week. That said, fortunes are built in down markets and by those who are able to take advantage of the volatility. These headwinds will no doubt, in my mind, pass soon enough. So, as far as I'm concerned, this is all good. And on this note, this will do it for today's video. If you found the content insightful, go ahead and drop the video a like and share with others who you think could benefit from it. For my newcomers, remember to hit the subscribe button and ring the notification bell so that you don't miss out on any future content just like this. As a reminder, I post every Sunday and now again on most Thursdays for more crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.